Hare Krishna. Welcome to my channel Purposeful Prosperity. We are continuing with our wisdom series with a little book of common sense investing, and today we are trying to explore the chapter 15, the exchange traded fund, a trader to the cause. ETF is the pretty much, I think many investors are really confused between investing in a index fund and an ETF. And I will guarantee that once you go through this session, you will be pretty sure that what you should be doing it. So, what is an ETF? ETF is Exchange Traded Fund. And if you take the advice of Mr. Bogle, he clearly says that ETF is nothing just a wolf in sheep's clothing. Nothing, nobody can make such a clear statement about ETF. And he clearly says this. So he defined the principle of the traditional index fund has been challenged by the sort of wolf in sheep's clothing, which are ETFs. So as per Bogle, he simply puts the ETF in is an index fund designated to facilitate trading in its stocks, dressed in the guise of traditional index fund. So ETF is like an index fund, but that allow you to trade. So using index fund as trading vehicle can also be described as short-term speculation. So Bogle clearly defined that using ETFs is like for those people who like to do trading and short-term speculation. If you are a long-term investor, then ETF is not the right vehicle for you. So Bogle further says that there is nothing wrong in investing in those indexed ETF that track the broad stock market as long as you do not trade them. But it's the investor behavior that makes sure that they do some action. It's really difficult to sit idle and buy and hold. It's the default in counterproductive investor behavior that make sure that they trade them. And as once they trade these index ETF, then they are no longer equal to the long-term index funds. So here Bogle is trying to give a comparison between the traditional index fund and the exchange traded fund. And so Bogle says that after all the selection challenges, timing risk, extra cost, and the added tax, ETF traders can have absolutely no idea what relationship their investment return will bear to the returns earned in the stock market. So I think all the retail investors who are dealing with ETFs, they are actually not able to see what kind of returns they are getting with their ETF trading. Are they really getting the fair share of a stock market return? That should be the question that every one of us should be asking if we are using ETF. As per Bogle, so the ETF fund marched to a different drummer than the original index fund. In the word of the old song, where Bogle says that what they have done to my song. We have seen that many times. Some of the old songs which are very popular, they are getting remixed. And if you are really a music lover, then you really ask the question that what they have done to my song or to your favorite song. So as per Bogle, something similar has been done to his index fund by inventing these ETFs. So ETFs has proved to meet the needs of investor and speculator alike, but they are also proved to be mama for heaven of stockbrokers. So not sure how much beneficial it is for investor or the speculator, but they are definitely beneficial for your stockbrokers because the more you are going to trade, more brokerage he is going to earn. So this is clear that for a stockbroker, ETFs are definitely the right vehicle, and he is going to promote ETF just like anything. So on the right hand side, if you look at this, so the broad index fund, the traditional index fund are being compared with the ETF. So if you look in terms of investing only, where you buy and hold, then there is not much of the difference. They are both stands equally. But as soon as you use the ETF for trading, then the long term horizon is not getting met. And the cost efficiency is also not there. because first of all you are going to have these trading cost, and second thing is that you are going to have some short term profits, and on those profits you are paying taxes, and both these costs are going to make sure that in a long term you will not be able to create wealth. So that is something we should be really caring of. Apart from the broad index fund, there are many specialized index fund, which are investing especially in different sectors, and they are definitely not broadly diversified. That's one of the biggest thing which Bogle says, that your index fund should be broadly diversified. But those specialized index funds are not meeting under that category, and definitely they are not for the long term, and they are not, also not tax efficient, and we don't know in both in trading and these specialized index fund that are we really getting the fair share of return or not. So that's something we should be definitely looking in those things if you are using ETFs as your trading vehicle. So as per Bogle, he sees trading as a loser's game for investor and a winner's game for the broker. So if you are using ETFs for your investing journey, then you should be aware that if you use that as a trader, then you are playing a loser's game, and your loser's game turns out to be a winner game for your broker. Bogle says that the amazing growth of ETF certainly says that investors favor complex strategy and aggressive trading and continue to believe against all odds that they can beat the market. So with introduction of ETF, Bogle is firmly convinced that we don't like simplicity. We learned in the previous chapter that simplicity is the key for investing. But with these ETFs, we are trying to make our investing journey complex. We are doing aggressive trading, and with all this, what we are trying to do, all the investors are trying to beat the market, which are against all odds. We have all the sufficient data to say that it is almost impossible to beat the market, but then every retail investor is thinking that I am going to devise some algorithm or some strategy which is going to beat the market, but unfortunately he will be the loser at the end. Then Bogle says that the high rate of ETF launches and closure suggests a new investment fad, and such fads have rarely enhanced the well-being of investor. So that's really a caution which Bogle is trying to give, that such kind of these more and more ETFs are getting launched nowadays. We can clearly see the behavior, and this more and more of such launches and these lucrative options of ETFs are not in the well-being of investor that we should be knowing. In one of the quote, Bogle says that out of 1,500 stocks, out of 1,500 ETF funds, 1,450 that I just would not touch because they are not diversified enough. So look at the percentage. It's more than 90 percentage of ETF funds are not diversified, or they have huge speculative twist to them that if you guess the market right, you will do well, very well, for a day or two, but who can do it? Nobody. So you can clearly say that yes, you can use the ETF funds, but then with these ETF funds, you can do well by trading for 1 day, 2 day, 1 week, 1 month at max. But then how long you can do this? Nobody can do it. If you ask any big investor, he is saying that you nobody can beat the market like this. Nobody can predict the market like this. You should be the god of investing. Then only, even the god of investing, Warren Buffett said that you cannot time the market. So a retail investor is thinking that I am better than him. Am I the god of investing? So by trading these ETFs, are you trying to become the god? Unfortunately, in the process of becoming the god, you are going to die poor. That's the advice Bogle is trying to give to all of us. So Bogle further says that in almost every respect, most ETF has strayed far from the concept of buy and hold, diversification, the rock bottom cost that are exemplified by the traditional index fund. So definitely ETFs are moving away from the traditional index fund. Although they begin with the intention to be something similar to a traditional index fund and with the additional of trading feature, but slowly they are moving away from this thing. That's the conclusion for Mr. Bogle. So here Bogle give an example of Pundre shotgun, which is very good for the firing game, but this gun was mostly used for doing suicides. And so, comparing with this example, Bogle says that I suspect that too many ETFs will prove, if not suicidal to their owner in financial terms, at least the wealth depleting. So, more we are going to put into this ETF, we are going to deplete our wealth. That should be the advice he's giving to all of us, and we should be listening to him if we really want to become a successful investor in our investing journey. So, like all the bad things have clear warning. So Bogle is trying to give some two clear warnings with the ETFs. So first one, he says that handle with care. So as per him, this should be the first warning on the ETF label, though I have not seen it used. Or the second warning, it should be saying that caution, performance chasing at work. So by default, people are investing in ETF just to chase the performance. When a particular sector, let's say a finance or a commodity, uh, or some banking or some PSU stocks, if they are chasing performing good, then people are investing in their ETFs just to chase the performance. If IT is performing good, then people will put a lot of their money in the IT index fund or the IT ETFs, and they are chasing the performance. And they thought that, okay, over the short period, we are going to get some good performance. But when you chase this kind of a performance, you are going to be defeated and it is going to cost a lot to you in your investment journey. So we should be really using these two labels, that handle with care and caution, performance chasing is at work. If you put those two labels in your every ETF transaction, then you should be knowing what you are doing, and that can save you from making all these mistakes in your investment journey. So Warren Buffett, in one of his quote, he says that the greatest enemies of equity investors are expenses and emotions. So by trading those ETFs more frequently and paying the short-term taxes, we are increasing our expenses. And these emotions are getting played when we are trying to chase the performance. So these two things are definitely getting more active if you use if you use ETFs compared to a traditional index fund. So with the ETFs, you have more chances of paying higher expenses and your emotions can become unstable. So if you really want to become your enemy, then feel free to go towards the ETF. And if you are a wise retail investor, then stick to a traditional index fund. So now many people can ask that why ETFs are not investors' dream come true. So as per Bogle, ETFs are clearly a dream come true for the entrepreneurs, the stockbrokers, and the fund managers, but they are not good for retail investors. And this you will be able to answer yourself if you use your common sense and ask the below question which has been given by the Bogle. So Bogle has given 6 questions here, and if you ask these questions, then you are going to get an answer clearly. Let's just see what these questions are. So first he says that do investor really benefit from being able to trade these stocks all day long in real time? So ask this question that ETFs are providing the benefit that we can really trade them in real time. But do you think that we real investor who are investing for a long term buy and hold strategy, uh, does it give any benefit of doing a real time trading for ETFs? I hope you know the answer. Second question he asked, is less diversification better than more diversification? We have seen that many sector ETFs has come into the picture nowadays. Bogle is saying that more than 95 to 98% of ETFs are not even properly diversified. So do you think this less diversification is better than more diversification, especially if you are an index investor? Definitely not. Third question he's asking, is trend following a winner's game or a loser's game? Definitely we understand that that's a loser's game. We should not be following the trend. And ETFs are mainly used for that purpose only. The fourth question, Bogle is asking that are ETF truly low cost vehicle after we add their brokerage commission, taxes on short term profits to their expense ratio? So in the beginning, if you look at the expense ratio, it looks very small and it sometimes look even less than the index one. But the point that we are missing is that the brokerage, we are missing also the short term taxes that we are going to pay there. So if you add those things, then definitely the expense ratio is going to become more for the ETF compared to an index fund. Bogle is further asking that is buy and sell, often with great frequency, really a better strategy than buy and hold? But if you are going with the Warren Buffett, Charlie Munger, or the John Bogle, I think it's the buy and hold, or is always considered as a better strategy for a retail investor, especially. Last question Bogle is asking, aren't the investor in these exchange traded funds too often engaged in the folly of short-term speculation? So these ETFs tradings is going to turn you into from an investor into a gambler or a speculator. And you will never able to guess this thing. That's one of the biggest risk that we are having if you are an ETF investor. You will never know that when this transformation will happen, and from an investor you will become a trader. That's the biggest risk you are carrying if you are investing in the ETFs. So I hope if you ask this question, and your common sense is going to answer all of them, and you will be able to save yourself by doing this ETF investing. So Bogle, in the end of the chapter, is arguing to the intelligent investor. So first of all, he explained that ETFs are nothing; they are simply uh, tied it into a plastic bag and turns it upside down. So that is what they have done to his traditional index investing. So your TIFs are being put into a plastic bags and turns upside down, and they are getting sold to you as ETF. So if you are really intelligent investor, you should be avoid buying those plastic bags. So in short, ETF is a trader to the cause of traditional index fund. So you are investing in a traditional index fund, but you like to use this as a trading vehicle. That's what ETF is about. If you want to become a trader, then please feel free to go for an ETF. But for an intelligent investor, that is not the right vehicle. So Bogle says that I urge intelligent investor to stay the course with the proven index strategy. So he is really pleading to all the intelligent investor that please stick to the proven index strategy only. And here Bogle says that I cannot assure you that traditional index fund is the best strategy ever devised. I can assure you that number of strategy that are worse is infinite. Look at the beauty how he is explained this tough thing in a very simple way. So although he is giving all the required data and the arguments in favor of index industry, but then also he says that even after that, if you are not assured, then he is saying that there are number of strategy that can be really worse, and those strategy are so many actually. So if you really want to avoid from all these worse investing strategy, then you can do that thing by simply becoming an index investor. So listen to him and become an intelligent investor. So Bogle further gives a reference by Mr. Don Phillips, who was a director of Morningstar, and he says that there is a dark side of indexing that investors should not ignore. The potential to harm to investor increases as index offering become more specialized. What is exactly what has happened in the world of ETF? So you see, this is what is happening in the ETFs market. Investors are actually making their own wrong. They are really destroying their own investment journey by investing in those specialized vehicle ETFs. In the right hand, precision tool can create great things. In the wrong ones, however, they can considerably damage. So we know that there is a knife. If the knife is put into a hand of a doctor, it can really save the patient. But if the same knife is given to a thief or a dacoit, he can really create havoc. So ETF is just like that knife. So for a retail intelligent investor, why to play that with that knife? We are a long-term investor and we can stick with our index fund investing. And there is no need for us to go for the ETF because you have higher chances of cutting yourself or damaging your investment journey. Mr. Don further continues and says that in creating more complex offering, the index community has found new revenue sources from very specialized tool, but it has done so at the risk of doing considerably harm to less sophisticated investor. So see, all these different complex offering, even in the index which are coming into the picture, they are coming just so that more and more money can be fetched from the investors. So they are simply the revenue sources for your AUM companies, for your mutual fund companies. They are simply fetching revenues from that thing. So for a less sophisticated investor, these things should be avoided. We must be avoiding those things. So I really advise a retail investor to stay away from all these complex offering. That's the advice even Mr. Don Phillips or the John Bogle is giving to all of us. Mr. Don further continues and says that the test of character facing the index community is whether it ignored that risk or step up and tries to mitigate it. The continued goal, good name of indexing lies in the balance. So now it is a test of our character that if we are truly an index investor, then can we ignore all these risk by stepping up into investing of all these ETFs, especially the sector-based specific ETFs, which are not even properly diversified. So if we don't make a good balance, we are going to destroy our investment. Bogle further gives a nice quote from Mr. Jim Vendit, where he says that if you believe in indexing, then you know that there is no free money. Yes, with all those ETF trading, we are trying to make some free money, but we have to understand, sir, there is no free money. It's important for us to keep our eyes on the ball and remember that what makes indexing well indexing. So if you want your indexing to become well, how it should be? It should be low fees, broad diversification, and hold, hold, hold. When we say three times the same word, we are putting so much emphasis and we are saying that there is no alternate, no alternate, no alternate. So definitely although he's a founder of ETF.com, he clearly says that no, ETF is not the right way. What more do you need to convince yourself that ETF are not the replacement for your index fund investing? He further says that don't believe in the hype to try to beat the market in any manner. Don't believe in the hype, try to beat the market in any manner, and you are likely to get beaten. How much? By about the cost of doing it. So the more you are trying to earn with this mentality of beating the market, that much extra percentage you are going to lose actually. That is what his advice is. And we should be listening to such great investors and trying to be away from all these attractive things or attractive hoardings or the banners which all these mutual fund companies are trying to give. So ETFs, as Bogle first says, that they are trying to present uh, wolves by clothing them in the name of ships. So we retail investors should be avoiding such kind of mistakes in our investment journey. So I hope by now you should be convinced that if you are a long-term retail investor or a passive investor, you like to invest in an index fund, and your ETF are not a replacement for your index fund. They are trying to make an investor into a trader, and I hope by now you are firmly convinced. And if not, I would say once again go through this chapter once again, and I'm sure that at the end of the chapter you will be firmly convinced whether to invest in an index fund or an ETF. I see this kind of a question is being asked as multiple forums, and every person is giving different answer, and no, none of their answer are going to convince you. But if you look at this video, hear it one or two times, I am sure that you will be firmly convinced and never going to become a trader by doing this ETF trading in your investment journey. So thank you. I hope you get something out of this valuable from your for your investment journey, and this is going to be really helpful for a common retail investor because all these videos are for him only in order to make him uh, a, a wiseful retail intelligent investor. So if you think this kind of a contents are really helping you, then feel free to like, share, and subscribe, especially to all those retail investors who are new to the market and going to fall into the victim of all these ETF tradings. We should be saving with them if you can share this kind of a content with them. That's the best service that you can do to all such new retail investors. So thank you once again. I'll be coming up with the next chapter soon. So till then, Hare Krishna.